make climate finance projects bankable. Bankability is a big thing for climate investments. But bankability, like those existing criteria aren't actually designed or suited to our small island needs, right? So instead of us trying to fit ourselves into that box, we need to come up with solutions, and we need to push back and show this is what we need and this is why. And then showcase some of the existing innovations, some of the existing projects and activities that have always been happening, and see how we could bring that up to scale. And I think we tend to not value in the Caribbean what we've been doing, right? And it's important to note that, Caribbean SIDS have long been adaptation pioneers. The thing is, we have to deal with hurricanes every year, flooding every year, but we're able to bounce back because of the work that we've been doing. But we've gotten so accustomed to dealing and managing with natural disasters that we tend to forget that we've already innovative. We already know, and we already have these best practices and success stories that we could share and scale up and be able to attract finance that is suited to us. So I would say that we have to look at criteria for bankability that meets our needs. That has to ensure that bankability isn't only about return on financial investment, so profitability. We have to also look at criteria that takes into account people and planet. So ensuring that we are building social and economic resilience, ensuring social inclusion and equity, and maintaining and protecting our ecosystems and natural resources. Since a lot of our economies are generally based on sectors that are among the most climate sensitive: agriculture, fisheries, tourism, right, for example. And then even our infrastructure, public health, water, those sectors are very, very sensitive to climate impacts as well. So you're seeing the story we're painting is we have to create solutions for ourselves, and we have to demand that the financial system and criteria that project funders and investors and so on want are suited to us, right? We've tried it before. We all have examples of what has worked, what has failed. But now we have the solutions and we know what we want. So that's what we should start doing. Also, we have to look at what has been working. And I think the Caribbean Climate-Smart Accelerator is, it's a pioneer and a success story in that what the CCSA has been able to do is that they're able to now bring projects to scale by aggregating projects from across the region to create something that's attractive to investors. They've also been able to pool investments from a range of different sources and be able to look at investor matching for specific projects. So I think this investor forum is quite useful. It's very relevant, and just looking at this is one of the solutions that the Caribbean has right now. So it's to ensure that we're able to bring in investments into climate resilience and climate action here in the Caribbean, and really harness and scale up the work that the CCSA has been doing. And I definitely look forward to hearing about the projects at this investor forum here at COP28. So thank you so much. And I definitely look forward to these projects, hearing about these projects, and ensuring that we get investment into these really exciting, innovative, and needed projects that will support resilience building here in the Caribbean. So thank you so much.
Thank you so much, Sasha, for your comments. Very pointed and very well aligned with the work that we do, and certainly aligned with the themes that we've been hearing throughout COP about what is needed for the region. I'll now invite our investors who've joined us today to join us on stage, starting with Ms. Marissa Drew from Standard Chartered Bank. Yep. Mr. Thibault Minaj from HDF Energy, and Mr. James Lindsay from Builders Initiative. Thank you so much. Thank you. So thank you so much for joining us this morning. Let's get started by sharing your perspectives on the work that you do individually with your organizations and how that work aligns with what is needed for the Caribbean region. So you would have heard at the start of this session what we do as an organization, and certainly there was some great context setting for the needs of the Caribbean region. I think some of you work very well, are very deeply embedded in the region. Others have had previous work in the region and may be looking to enter the Caribbean market. I'd love to hear what it is you're looking for, what criteria you are looking at for investment in projects, and how you believe the mobilization of capital in the Caribbean can best work for you and for projects. So, James, you have the mic, so you can start. Give us a brief introduction of yourself and your organization, and then tell us what your perspectives are on investment and your criteria.
Great. Well, thank you for having me. My name is James Lindsay. I work for Builders Vision, which is Lucas Walton's family office. He's a younger gentleman. He inherited his capital quite young, and he always knew he wanted to do more than just create the normal structures of a family office, and that he wanted us to think about systems change and work together for more good. A lot of family offices are very segmented. You'll have a grant team that is in a different city than your investment team, and you might have a large pool of your assets outsourced. So you undo a lot of the good work that other initiatives do within the larger platform. So you lose a lot of synergy. And what we really try to do is work as closely as possible with all of our different teams. So I co-lead an investment vehicle with somebody who runs our grant ocean strategy, in order to create a pair of an investor with an impact first professional. Let's have the most good as possible with these dollars going out the door. So I wear two hats. I run an ocean focused vehicle that's focused on spurring innovation in the blue economy. And this is actually a really easy problem when you're thinking about the system that we're trying to change. There's about 35 ocean focused accelerators and investors in the market today. It was even worse 5 to 10 years ago. There was kind of one family office and a couple of accelerators popping up, but if no one was consistently funded, nobody had investor backers, and entrepreneurs were just absolutely dependent on pure play research grants if they were lucky, and that was about it. So we've made over 55 investments out of that vehicle, half in fund managers. Some of these have gone on to raise over 200 million euros. We've one that just closed at 220. That's a diversified strategy, doing everything from restorative aquaculture roll-ups to plastics reduction. And we've made about 18 direct investments in things that might need a little bit more time to commercialize. A good example of this is Coral Vita, who I think many of you will know. They had a long scientific pathway still ahead of them before they were venture ready. And we've seen that they're now much more commercial and actually have a coral farm not too far from here now, which was really great to see. My other hat is a project financing vehicle where I'm trying to fix what we call missing middle. If you are a hard tech entrepreneur and you need to build your net zero cement or steel facility and need $20 to $40 million to prove it's not just a lab bench experiment, you're kind of screwed. You're either waiting on a DOE loan pool application that's going to take 2 years and probably cost you $1 million in legal fees, or you're looking for a large grant from an energy commission, and that's few and far between actually materializing. So I'm coming in and providing flexible project financing that can get you out of the lab faster and into these first of a kind type facilities. And I try to bridge this with climate justice wherever possible. So right now I'm in advanced diligence with a company that's making a net zero cement that is targeting low income housing as their entry point. They're making cinder blocks. And this actually starts in the Caribbean. So for something like that, we can come in and create a very market rate of return expectation instrument that will hopefully catalyze other investors in with us. But we're willing to go in and put in incentives for the company to stay true to their mission. So, well, the green cement's going to stay green pretty much no matter what they do. Their stated commitment of saying we want 50% of our bricks to go to low-income housing. Maybe this would be Dorian reconstruction type initiatives. And we're willing to forego part of our upside down the line if they stay true to this. So it's been a really exciting few years. We've only been active as an organization under the public-facing name for 2 years. And we've seen a lot of really promising results. We actually just announced a blended finance vehicle with several other family offices. I think this came out on Saturday. A $250 million initiative between some of the bigger names like Gordon and Betty Moore, the Rockefeller Family Office, Ballmer Group. I think there's 8 other families. I'm not going to list them all. And it's designed to be the tip of the spear to how do we think about systematically bringing oceans into the climate equation in the most vulnerable areas. Because 1, they need it the most. 2, it's where the most innovation will come from. If you're looking down the face of the hurricanes that will destroy your livelihood, you will probably be much more productive than somebody sitting in a lab in Caltech. And I'll leave it with that. I'm really excited to be here. We've been very active in the Caribbean and we're trying to get more active. So thank you for everything you're doing.
Thank you so much, James. And it really is very encouraging to hear that as an investor, you are providing multiple types of investment opportunities. Certainly as an organization, we believe that fit for purpose funding is very important. And we have found really that there's a huge gap at the early stage of the funding pipeline where persons are willing to provide philanthropy, catalytic funding, and very patient early stage funding that allows projects to really get off the ground. So really great to hear about the work that you're doing. Thibault, you are deeply embedded in commercial activity and in one of the sectors that has really taken off in the region. I'm sure there are numerous opportunities for investment in your sector. So tell us what you're doing and how you've been able to achieve success with investment.
So hi everyone, I'm Thibault Ménage. I'm the vice president for HDF Energy, which is a French company specialized in hydrogen, and I'm the vice president for the Caribbean. So my story with HDF starts with the development of the Caribbean, where actually it's impressive to see that this region that especially on the energy and heavy industry sector is not necessarily leading, instead of except for like Trinidad and Tobago that actually has led a lot in this. But the small islands are not necessarily leading because of their size, because of the history and so on. And we see that this company that basically we have built has created a lot of its first reference and is still creating a lot of its first reference in the Caribbean. So the Caribbean journey started with the development of a hydrogen fuel cell in Martinique that we moved from like Eastern Europe in a university to Martinique in order to be able to transform a valuable gas in a refinery that was not used, that was just flared, into, I would say clean electricity, because in the concept of additionality that was flared, so it would not be used, right? So that was the first project that we ever done, and that was integrated in 2019. That was the first hydrogen, I would say decarbonized hydrogen project in the entire region. From then we started developing, still on the French territories, but very regionally, a huge concept that was combining a very large solar plant with a long-term storage based on hydrogen and some batteries to deliver power day and night from the sun. Right. And that was very interesting in terms of resilience, because in French Guiana, actually, you have a medium voltage line that goes from the main city to the border of Suriname, where the project is located. And this is really a growing area, because also there's more and more Surinamese that start having activities in this area and move there and so on. And there's a hospital there, which means that if the line of electricity goes down from the main power generation in the main city to this place, you may have a problem with the hospital activity, right? So that was a requirement from the grid operator when we developed the project. They wanted us to put more storage. We already had a huge amount of storage, and they say, no, can you put 2 days of storage? And this is how we started this solution that we called Renew Stable, and that I started developing in other islands across the Caribbean, starting with Barbados. And the journey has been very interesting because, 6 years ago, I started by myself, and now we are just on the English-speaking Caribbean. I lead a team of 10 people, only people from the Caribbean, not brought any French person to help me. So we have 4 Trinidadian, 3 Barbadian, 1 St. Lucian, 1 Lucian, 1 Jamaican, working with us on developing other projects. We did speak about it yesterday morning, but we actually invested. Usually we are the developer and we bring investors in our project. We create special purpose vehicles for each project, and that becomes a business opportunity in its own. We develop the project. We have the knowledge on how to develop the project, but as it was said yesterday as well, we don't do anything by ourselves. We can't, right? We need help. We need to team up with the right people. We need the right capital because we are developing too many projects around the globe, and we raised 115 million. For us, it was good, right? But we are developing a pipeline of $5 billion project in the world. We can't finance all of them, even if we leverage it with a lot of debt, right? So each project is a company. It's called a special purpose vehicle, and each project is a company that attracts its own financing, its own financing model, and its own access to blended finance, which I will discuss after, and its own equity investors, and its own bankability as well. That was discussed just before. I like when this word comes out because it's a real topic in the Caribbean. So we are creators of opportunities in the green energy sector, let's put it this way, with a specialty in hydrogen, because we use hydrogen storage in our project. And you will see that once you get to the stage where the project becomes bankable or close to bankability, the money is not the problem. The money is not the problem. The Caribbean actually sits on excess of liquidity. I spend half of my time in Barbados. Just the credit unions there, they have $3 billion sitting on accounts that are actually not making money. And very recently now, if you have more than 20 million on an account, they get taxed for it. So it's not only money that is not being used and flourishing, it's money that is losing money, right? And what they would all say to you is that there's a lack of, first there's, at least for Barbados, there's a lack sometimes of investment appetite locally, because we are being asked to have like a local investment, and we like it because that's from a pure investment perspective, that protects your project. If you have a lot of local investors, the minister decides to change the law, to change the whatever, to have an action that impacts your project. If you have 30% local investment spread across a lot of people, they're not going to be happy with the government, and that may have a big impact, right? So we are actually for local investors. We always have local investors in our projects, and there's a lot of local capital sitting in the Caribbean again. Where I operate for sure, Trinidad, Barbados have a lot of capital, Jamaica as well. It's just the making sure that you have the shoulders to make your project bankable in this environment, which is very tough, to be honest. That's the first thing. And the second thing is to really take the time to work with the local investors to get them there. And once they buy in, that's a good shield for your projects as well. I mean, I'm sure we're going to discuss a lot of other stuff, but it's just linking our development activity with the investment discussion we're having today.
Thank you so much, Thibault. I know you're doing some pioneering work in the Caribbean and in Barbados in particular on energy. And it is again interesting to see you playing both roles, project developer as well as investor. Certainly from our perspective, creating solutions that make sense for the environment that you're in, developing fit for purpose solutions to be able to support climate action really is important and integral to us being able to achieve our ambitions. So turning to you now, Marissa, you have also been on the forefront of financial innovation, certainly promoting the use of blended vehicles and structuring, earmark deals for sustainability and for climate finance. Tell us about what you're looking for now as Standard Chartered, as investment opportunities for the region, and what the key criteria are for investment for you.
Sure. So I'm delighted to be here. Thank you for having me. And it's nice to be in very good company. So I come to you actually with 3 hats today. So one hat is as Chief Sustainability Officer of Standard Chartered Bank. In that capacity, we are looking to mobilize capital at scale for climate and sustainability solutions. And one of our key themes in that capacity is very much the recognition that we need to put adaptation finance on the table, as our opening speaker suggested. We've done some research in our developing economies, and this research in the first instance was just trying to aggregate how much money was really going and being directed to developing economies as a percentage of total climate finance. And I think it was sort of in the opening comments suggested, but in our research, it was sort of less than 0.1% of all climate finance. So that is a relatively sobering number when we realize that the need to adapt to everything that we're seeing playing out right now is so critical. The other aspect of adaptation finance is the longer we wait, the worse it gets and the bigger the numbers get. And they get increasingly bigger in an exponential way, both through time, but also through temperature rise. So if we were to overshoot 1.5 degrees and move into unthinkable worlds, those numbers multiply and quintuple and so on. So there's an urgency to actually put capital to work in adaptation now. And one of the big problems that we've observed is that typically when you talk to the private sector, they think of adaptation finance as being the purview of governments. But then you turn to the governments and they say, we don't have money for adaptation finance, and you get into a funny circ function. So what we felt that we needed to do was actually in the first instance, define this for the private sector, the concept of adaptation finance, and then create the frameworks on the one hand. So once you define, how do you create a commercial opportunity and where do you go with your money? So when you ask me what we're looking at in the first instance, it is things that will fit into the categories which we define as adaptation finance, so that we can be a little bit deliberate with the capital and where it's going. And so we are putting out, and very happy, very much in the minds of sharing some of the work we've done and inviting people in to participate in that work, is we worked with the UN, we've worked with the World Economic Forum, we've worked with a number of consultancies to create a framework and a practitioner's guide. So if you're thinking about directing capital in this way, what are those areas that would be under that definition, whether it's resilient buildings and to the point of the green cement, through to natural capital solutions, which I think we're all familiar with. So we're very hopeful, and I have to say I'm coming out of the meetings here at COP where this topic was absolutely not on the table of the capital allocators a couple of years ago. And I've met with private equity funds, I've met with family offices, I've met with other versions of capital allocators. And what's interesting is they're raising deliberate funds with adaptation in the name of the fund, not just mitigation. Now, the other question I get asked a lot now that I'm putting this topic on the table in a really, really big way, and we're making a lot of noise about it, is why haven't we done it before? And I think the reality is, to quote somebody from the World Economic Forum, is the reason we probably haven't done it before is the belief that if we're talking about adaptation finance, we've kind of failed in mitigation. And actually the reality is maybe we're failing, but now's the time to adapt, to the very point that I was making, that if we wait, it's just going to get worse. So that's just sort of one bit of conversation. In my history, I have been very deliberate, as you say, about going to places where people said things can't be done. And I'm a rebel, so I say, bring that on if someone tells me that. And so some of the things I've done in my past were to create the first public equities fund to invest in the oceans of about $500 million. I've also did the first institutional grade debt restructuring for the island of Belize. And that was taking the debts of a country and repackage them and refinancing them with a very deliberate decision to take a portion of that capital as a prerequisite to me underwriting that capital, that it would be invested in the marine conservation projects that would help the country actually help itself. So it would help its fishing industry, it would help its tourism industry. So part of the restructuring was a win-win for both investors and for the economy of the country. Now we're taking that and having different variations on the theme, not only going to other islands and doing it bigger, but also thinking about the application of those proceeds beyond just marine conservation. So the second hat that I wear is as a global founding partner of the Earthshot Prize. And it's so wonderful how connected we are, because an Earthshot Prize winner is Coral Vita, who was doing the project in the Caribbean in the first instance. I think the first project was Bahamas, or the test project was Bahamas, wasn't it? Made Research Farm is Bahamas. Yeah. And so Earthshot Prize, for those of you who are not familiar, is a very much I would call it a passion project, my words, not his, of Prince William, where he wanted to showcase young entrepreneurs who have solutions that are really breakthrough solutions that can scale. And one of the verticals within the Earthshot Prize, and this is an annual prize, which is in its third year, there are 5 winners along 5 different climate themes, one of which is oceans, is that those winners will not only get £1 million, so a very nice sum of money, but as importantly, a deep dive 18-month acceleration program with the backing of the royal family and all of their wonderful connections and visibility that gets created, and connecting into those that can help these companies and these entrepreneurs. And it doesn't have to just be oceans. There are 5 climate solutions. Many of the winners this year, which were just announced in Singapore, we're also doing community-based work, but very much, I would say, geared toward island nations. So everything from in some of the shortlisted winners, sustainable fishing, a community work that is galvanizing smallholder farmers and fishers, things that are all very much focused on how do you accelerate, I would say, the indigenous ways of operating that are climate friendly, which are mutually reinforcing. So that's one area of really, I would say, giving visibility at those super early stages of maybe past the tech risk, but moving into the scale opportunity. And then my third hat is I sit on the advisory board of another wonderful royal, which is His Serene Highness Prince Albert of Monaco. And with the foundation of Prince Albert, we're creating a fund backed by the foundation that is deliberately investing in the next stage. So whereas maybe the Walton family office is going at that early venture stage, what we want to do is come in to a very difficult place, which is between venture and before big, where they often call it the valley of death, where you're looking for capital that you're just not quite ready for prime time, but you're past venture. And how can we fund those projects, all ocean related, that again would be very applicable to the Caribbean islands? So very excited about that fund and looking for projects that might fit that criteria. So I think all of us are quite complementary in what we do, which is nice to see. And I suspect we'll get into the discussion of collaboration and how we can do that in a material way to make a big difference. Thank you.
Thank you for your comments, Marissa. And I think from our perspective, once again, the complementarity of our investors this morning reflects our perspective and our experience for the region, that certainly we need to have funders in our pipeline who are able to support projects that are at various stages of their development. So I'll take the opportunity now to invite our Director of Public Sector Projects, Ms. Keisha Farnham, to join us on stage. She is going to deliver synopses of about 6 projects that are in our pipeline and all seeking different types of funding and support that may be of interest to our investors. And then once she's finished, we will invite the investors to kind of share their perspectives, perhaps criticisms, questions, what you might like to see more to vet your investment appetite, to help us get these projects to the stage where they can access financing. So Keisha, thank you for joining us, and over to you.
We can, yeah, there we go. There's supposed to be some slides up. There we go. All right. So just in terms of kind of setting the scene, in terms of the projects and initiatives of the CCSA, we have currently in our pipeline over $11 billion worth in projects. And we have our projects separated or disaggregated against 2 groups. So Lighthouse, louder, okay. Lighthouse projects, and the Lighthouse projects are initiatives that we spearhead at the CCSA. We take a leading role in conceptualizing and championing those projects. And then we have the pipeline projects, and those pipeline projects are projects that are submitted by project owners. They're seeking matching services, and those matching services is either with investors, implementation partners, or strategic technology placements. We do this across all 4 pillars. And so we have the climate smart map, 90% renewable energy for all, protecting 30% of our land and ocean by 2030. And that includes projects that are related to the blue economy, climate smart agriculture, circular economy projects. And we also look at projects that will build economic resilience through the creation of 1.5% new green jobs. In terms of some of our lighthouse projects that we're featuring today, the Caribbean Blended Finance for Resilience Fund, which is valued at approximately $2 million. We're seeking an anchor or seed investment of $3 million. Sorry. 200 million. Yeah, 200 million. Sorry, 200 million. And we're seeking an anchor or seed investor of about 3 million. And this project, through the support of the Caribbean Development Bank and the Canadian CARICOM Climate Adaptation Fund, we were able to create a framework looking for an appropriately priced regional blended finance instrument to access fit-for-purpose financing. And we've been talking about the need for that to promote greater adoption of renewables in the region. And so the stage that we're at right now is that we're seeking that anchor or seed investment of 3 million. The Caribbean Solar Assembly Plant, this project is valued at 20 million US and is seeking a manufacturing owner operator and offtake agreements for this 400 megawatt solar assembly facility. The project is aimed at pursuing a 20-year agreement to establish a solar assembly plant in the region with offtake agreements from neighboring countries for the supply of solar to the private sector, for governments establishing regional ownership interest in the plant. The Caribbean Single Energy Export Market, and this is quite an exciting project. This project will require approximately $3 to $5 billion of investment, but this investment will be catalyzed by offtake agreements. We are interested currently in having conversations with organizations, companies that believe that they will require green hydrogen so that we can get this project moving. What this project seeks to do, however, is to connect the region, the countries of the region, in a multi-point, multi-directional pipeline for renewable energy contributed by different Caribbean nations. And so this excess energy will have the potential to create green hydrogen from an amalgamation of renewable energy resources, whether that's geothermal, offshore, onshore solar, wind, but looking at how we can create a potential for an export industry. Next, we have a project where the pilots have actually already started in August of this year, but we're looking at how we could roll out innovative yet simple to deploy and manage hydroponic growing units. And we've already rolled out in 3 countries. So we have a pilot that's been launched in Anguilla, Cayman, and Barbados. And these pilots are approximately 60,000 US per pilot. What's really exciting about this is that we had plans for scaling into the new year. the government of Cayman, within the first month and first yield of 5 of the units, decided that they wanted to scale immediately and invested in 20 additional units. The units literally take up a 10 by 10 space. You can get about 250 pounds of food for each growing cycle. And they use very minimal water and electricity. And we know how expensive electricity is in the region. But I think what is particularly exciting about these units, it's that it's incredibly simple. The school kids put them together. You don't need to be a trained, expert in this area to be able to put the units together. And if you do need to replace the parts, you don't need to import it. You can literally go to your local hardware and get the replacement parts for it. And so this project is not only focused on, of course, building food security resilience, but also just building capacity. And when we look at the beneficiaries from this particular project, it is focused on vulnerable youth, women, and other vulnerable populations. So in some of the countries, the project is focused on building capacity for persons who would have been recovering from addiction, helping them to find employment, or in some cases, persons who are victims of domestic violence, etc. So there's a huge social component to this project as well. Now, I had mentioned the project pipeline, right? So the projects that we would have just gone through are our lighthouse projects. The project pipeline is where, or a pipeline project, are the projects that we get from outside, right? So persons would go on our website, register their projects, or approach us, and we will send them to the website to register their projects, right? And so these projects are looking for some type of matching. That matching takes place via 3 mechanisms for us. So one of those mechanisms is the investor forum, like what we're having right now. We also do ongoing one-on-one matching. So once you're in our system, we're constantly looking for opportunities for you, and we reach out to you directly when those opportunities come up. And then, of course, the Financial Advisory Committee, which is made up of the heads of private sector banking institutions, and they offer debt, equity, investment opportunities, but they also serve as an advisory committee for us in terms of advice on how projects can be prepared for that type of investment. So from shovel worthy to shovel ready, Raquel has been using this term, and Sasha alluded to it too as well. So we do have a lot of great projects in the region. We are the architects of our own survival. We've been doing this a long time. However, we are a region that has been traditionally characterized by grant funding. And so people understand grant funding. They know how to design projects for grant funding, but grant funding has been receding, and the type of investment that's now available, a lot of persons don't understand how to do projects for that type of investment. So when you look at what the challenges are, and we didn't just come up with these off the top of our head, we've literally vetted over 300 projects from across 28 Caribbean countries. That's the Spanish, the French, the Dutch, and the English-speaking Caribbean. And this is the reoccurring themes that we're seeing. So lack of project preparedness or readiness for investment, lack of fit-for-purpose financing that meets projects where they are, the size of the projects and the ability to scale. I mean, we're all very small markets, right? So small markets, and then of course, capacity constraints, literally bums and seats. We just don't have physically, some projects just don't have enough people in order to execute, or organizations having enough people to execute. So our current approach to financial flows, and again, Sasha alluded to that, really exacerbates the historical injustices that are happening. We're trying to fit into a box that just is not made for us at all. And so our response to that has been the design of the Innovation Fund Caribbean. And we've had to make a pivot as an organization, because when we came into the space, we thought, okay, we're going to have our investors, we're going to have our projects, we're going to match them, boom, we're done. That has not been the case. And so we have had to change our strategic approach. And part of that change is the development of this Innovation Fund. The Innovation Fund is valued right now at US 10 million, but we're seeking 5 million to start. And we're contributing, and when I say we, the CCSA, 1.6 million. And this is primarily grant funding. Of course, think about it, 28 countries, $10 million, not enough, but it's a start, right? And so what we will be looking at within this area is project preparation. So getting projects prepared for the type of investment that's actually available, looking at catalyzing indigenous commercial projects as well. We have so many brilliant young minds in the region. Just one example of a young man in Jamaica who is doing biofuel. There's so many young people with innovative ideas that can be commercialized and really just need that step. They need that boost in order to get into that space where their projects can start making money. And then project aggregation. So we're talking about creating those economies of scale. And the Climate-Smart Agriculture project is a great example of that. But we would have recently done a call for projects in August. And in any given country, the amount of individual projects that were looking at some type of either hydroponic farming with a renewable energy element, which is the type of projects that I particularly love, because I don't think that our focus areas operate in silos. If you're doing renewable energy, if you're doing climate-smart agriculture, it makes sense to have that powered by renewable energy. So there's a huge intersectionality that needs to take place, but also how do we aggregate those projects across countries to make them more desirable for the investment? In terms of the focus areas for this area, we do realize that the projects within the space of renewable energy tend to be more prepared more than in other sectors. So we're focusing on like mangrove rehabilitation. Of course, I mentioned climate-smart agriculture, marine conservation and protection and coastal zone management, climate tech startups, sustainable tourism, community-based tourism, low carbon construction materials, bio-based materials, the circular economy, recycling, water conservation, and efficiency. One of the things that I just want to make a very quick plug for, because we did launch our Climate Smart Map on Friday, and it really is the foundation of how we bring together all the things that we're doing, right? So how do we provide the information that will help us to increase philanthropic support, help us to prepare projects, help for investors such as yourself to be able to, with a click, to see what's available in the region and how it can be aggregated across countries. That's what the Climate Smart Map does, right? And so we're really excited to have launched that beta version on Friday. And so I just wanted to make a quick plug for that. And to say, please go onto our website, have a look at it, ask us questions about it. It's, we're really excited about it, but it's also something that we're going to need continued support in terms of keeping up to date. These things are only effective, they're only as good as the data that's on it, right? And that data needs to be up to date in order for it to be effective. So that is the short version of it. I could talk about this stuff for hours, but yes, thanks.
Thank you, Keisha, and please join us on the stage. And let me invite Mr. Crispin Dorvagine. Okay. All right. Thank you, Keisha. So, Shanna Emanuel, sorry, from the OECS Commission, to provide a short pitch on their OECS Solar Challenge project.
All right, good morning, everyone. So I come from the Organization of Eastern Caribbean States Commission. We represent 11 countries, 2 French overseas territories, 3 British or UK overseas territories, and 6 independent countries within the OECS, within the Eastern Caribbean. And they are islands that are very close, similar in a lot of ways. We are the smallest of the archipelago. And so we came up a few years ago, 2 years ago, with the Solar Challenge. The idea is to increase the deployment of solar throughout the OECS with the hope of getting distributed solar more on the grid, because we know solar is very much the easiest of the renewables for us to deploy. But for whatever reason, within our region, we have not been able to have enough investment into that particular technology. And so the idea behind the Solar Challenge really is to get all our countries thinking about, what do we need to ensure we have an enabling environment? Why did HDF decide to go to Barbados and not come to any of the OECS countries? Do we have that enabling environment? And if we don't, what do we need to do to get there? Secondly, it really is to get distributed solar on the grid. So what we want to do is work with small, medium, and micro enterprises to really get them involved, find investors who are willing to invest not just in one, but in several islands. So again, we understand that we are the smallest smallest in population in the Caribbean overall. So what we want is to aggregate the numbers to see how much more investment we can attract. When we're talking about the minimum of 20 million, we know that no one country is going to be able, or one project is going to be able to absorb that. But can we get projects that are aggregated among the countries that can then attract that kind of investment? And then the third thing we really want to do is raise awareness, both with the general public, but also with financing institutions. The example of the amount of money credit unions have is something that we are waking up to. Yes, we very much are waking up to. So how do we work closer with our financial institutions to even offer these kinds of initiatives or incentives for businesses, especially to be able to invest? A few weeks ago, with one of our partners in the Solar Challenge. So the Solar Challenge attracts funding for different things from different people. One of our partners is GGGI, the Global Green Growth Institute, and they actually did a call among a call throughout the OECS, just did a call for projects, and also asking businesses what would be what kind of mechanism would they be interested in using, financing mechanism. And surprisingly, at least for us looking at it, we got 21 responses. And of the 21, all the small and medium enterprises said, oh, we're willing to take a loan to invest in this. What we need now is to get reliable ways of getting the technology on island, and then of course deploying it, maintenance of it, etc. So I was also very happy to see Keisha present this idea of having homegrown solar technology built within the region. That's definitely something that's going to add to what we want to do, because we really want to see a major change in the entire industry, that our renewables include solar on a much larger level while we work on the others. The OECS is also all the countries with geothermal potential. So we know that that's hopefully coming on board, but until then, we really want the solar to be the renewable that everybody can access and get onto. Also looking at resilience, we know that solar is more than just energy in a time where, I don't know how many of you have ever been through a storm, but the hours after a storm are actually the best sunlight hours. And if you can have a situation where you can have energy still running, still getting that, and so you actually get to recover a lot faster. You get everything back on board faster. You have your hospitals and your critical infrastructure also able to run. At that point in time, a lot of schools are there for homes for many people. So if we have schools that now have battery storage and solar that are able to provide those kinds of support to those who have been badly affected, for us in our region, solar is more than a mitigation. It is actually also seen as an adaptation measure. It really is about building resilience for the entire region. So that's the solar challenge in a pitch format. And it really is it's a passion project for those of us who work. It's not many of us, it's 3 of us who work on it, but we're really hoping to get the kind of support that can move it from where it is now, which is slower deployment individual, to a much larger scale, both private and public sector.
Thank you. So for our investors, you've heard quite a bit in those pitches, and we'd want to kind of hear your perspectives and feedback on what you've heard and seen so far. To kind of break it down into some bite-sized chunks, perhaps we can start with projects that were seeking philanthropy. So, for instance, the Caribbean Innovation Fund as a funding vehicle. Perhaps Marissa and James, as this is your focus area. From what you've heard, is there anything that you would like to see in those projects that might make it more attractive for attracting philanthropy for funding?
We've been able to ride a little wave because And this is how I connect to the ocean. I surf as well on my free times. But we've been able to ride a little wave because we were able to bring green climate fund financing at a private sector-led project in the Eastern Caribbean. That has never happened in Barbados, for sure. In the Eastern Caribbean, I think it has never happened as yet, private sector. And it's the first hydrogen project in the entire world that gets GCF financing. And it's happening in the Caribbean. I mean, and everybody's like buzzing about hydrogen, putting billions on the table, the US, Europe, and the Middle East with big equity. And who is getting, I mean, they're not necessarily eligible for climate finance, but there's so many other places that are putting way bigger money behind. And it's the project in Barbados that we've been developing for 6 years that actually gets access to this financing. And is required because every single percentage I get on the debt, on the cost of my debt, is passed on to a more competitive rate to the end user. So it's a direct benefit. I don't make more money. I just make my project more viable, more competitive, right? And I can tell you that even right now, I'm trying to work with the EU because EU really wants to get in this project. They woke up a little bit late, but it's always the case. But yeah. So basically, we're trying to target grant funding from the EU, going through the EIB, coming to the project with a commercial a guarantee on the commercial local debt that we are bringing on, which is more competitive than in the international one, because locally I get 4%. Internationally, I get 8% at the moment. You see the big difference, right? So we're trying to arrange the entire financing in order to be able to face those higher rates on the debt side. And it's an expertise that you have to put at stake. And you should definitely not focus what you're trying to achieve on that at the moment if you're trying to help local entrepreneur to actually start building their first green cement that can be implemented locally. What we're doing at this scale, it requires like another level that is, as I agree, we've heard that it's very hard to access, and you need like a team to work on it. We did 18 studies. We did like resilience studies on the wind speed specific to the Caribbean. We need to do like a specific study about drainage due to like the flash flood that we see in Barbados. We did 18 studies for the project. Some of it was paid by the IFC, 600,000 on the table. Some of it that was paid by the IDB Invest, 130,000 on the table. But the rest, we paid it. We had 3.5 million at risk on the project at the moment, and we're going to get to the finish line. But it takes, like as a local small entrepreneur, you can't do that, right? Yeah. And I understand locally that it's easier to work with a model with grant funding if you're able to project then, and maybe this is where the focus should be as well, help the local entrepreneur to be able to build a business model that doesn't rely on grants after you get this first boost. I think this is what you were alluding to. Yeah. It's like, okay, this is the boost for you to start up, like make your first facility, you build your first bricks, your first green cement, your first hydroponic system. And then from that, before I get you the grants, show me that you can have a business model that is sustainable enough, right? So you can like pay yourself, get the project done, maybe hire another person, right? Or bring an associate. This is, I think, what the donors are looking at. Yeah. Accessing climate finance. I go to this conference all the time. Not COP is my first. I love it. It's very interesting for connecting, but basically, I hear about climate finance all the time. Oh, we put 3 billion on the table for the SIDS. We put accessing those billion. There's another game. It's completely different. Like, oh, we are so happy. We congratulate ourselves. We put 5 billion on the table. Who's going to access it? Yeah. France is very good in the European Union. So we finance European Union as every European Union country. But because we are so bureaucratic, historically, we're very good at tapping into the financing that we give to Europe back to our country. But you need to feel all those things and make sure you comply there and so on and so forth. And this is why the French developers actually around the globe have been quite successful for the size of the country. One, because it was too hard locally, so we had to go elsewhere to survive. Second, because like we have this ability to make sure we comply and we access the financing. So we're trying to bring that in the Caribbean, and through doing that with that type of scale project, I mean, the teams working on it are all, my team is local. Everybody's learning from it. And they would be able to learn it to an intern or whatever after. But I fully endorse what you're saying about let's focus on the small business. Let's keep the grant scheme mechanism. We just need to add to it the component of make sure what happened next. Is it like, does it work because it's just a grant or
Yeah.
does it have a future after that? You know, that's really.
Quick comment from you, Thibault, on the Caribbean Blended Finance for Resilience Fund. It's intended to be a blended finance fund, providing equity into renewable energy projects of any type. It has an accompanying technical assistance and monitoring facility that you would have mentioned why there's a need for that. But from your perspective as a developer and financier, receiving equity investments, what do you think the appetite in the market is for that from developers? Just a quick comment from you, and then I'll turn to Marissa for further comments on those funds.
So what is tough, I sold 51% of the project to Rubis, who's like an oil and gas company that internally needs to decarbonize. They decided to do so. They took their time as well, but at some point the investors are like, see their share going down like this, and they're like, oh, we have to do something. So they actually took shares, they participated to the IPO within HDF, and we were already working with them on other projects. And they invested in the project that I developed in Barbados. But we receive late a lot of equity interest, and we're just really picky about the investor we get in. Not only to make a good deal, but really to have the right people to make the project happen, because equity is a rare thing, right? It's a rare, precious thing. And the people you work with, you don't want 20 people on the board and you can't make a decision. You need to move fast, right? So you need to have people that understand what you're doing. And you need to have people that also complement your value, right? For example, Rubis in Barbados, they're not experts in what we're doing. They're not developers of what we're doing, but they were in the first project in French Guiana, so they understand, how it went. And second, they're able to, with their brand, to reinsure everyone, so we can move forward, right? So access to equity, it's once you have a project that is bankable and you have one first reference that is actually delivering with the return on investment expected, that's a big thing. You need to make a first one. Then it becomes, you can be picky. You can start being picky if it's bankable.
Thank you. So Marissa, private equity, funds, blended finance.
Just maybe stepping back as to what blended finance really is trying to do, the concept of blended finance, it is really taking either grant, philanthropic, or some form of below market concessionary finance of any flavor. But the design is, by putting that in place, you are attracting then commercial rate of return players to participate. So there's this concept of multiplier effect. So what I think you need to think about, and I think we're all dancing around the same thing a little bit in every one of these cases, whether there's a small one or the big one, it is, what do you need when and where are you on the life cycle? If you're at that early stage and it's sort of a business plan and an idea pre-commercial, that really is the space for grant funding or philanthropic funding or catalytic capital that's just going to kickstart you into, shall I say, prime time, where you can demonstrate that there's a business model that can be funded by a debt provider. If you're what I would say commercial return, so you also have to be able to tell the commercial return story if you want traditional finance like private equity or bank debt or what have you. If you're before that and after that grant capital, maybe blended finance does work for you, because you need to buy down the cost of that commercial debt in order to make it viable. So you need to be able to demonstrate that that's enough to get you to the commercial stage. And then if you're already at something where you're generating income or you've got off-takers, I can finance an off-taker because I'm not taking the risk of the project. I'm taking the risk of the person who's buying the energy on the back end. I can finance that in a very commercial way. And there's loads and loads of models for that. But I think you need to, I'm giving you advice, it's to articulate where you are in that capital requirement versus where you are in the business plan. The other thing I would also encourage any of these projects, as you're advising your project participants, is that you also, I think, need to be able to tell your impact story. So what impact are you delivering and how are you going to measure it for that investor? Because if most of us in this climate space or in the sustainability space, we are combining a return of whatever flavor it is, commercial or pre-commercial, with an impact story. And so you need to be able to say, I'm going to be measuring and I'm telling you, the investor, what that is. And I know this was just a snapshot, but I'm not sure I got that from the elevator pitch in each one. Last comment I would make is more and more funds that are getting raised in the climate world. It used to be all these general funds. I'm just a climate finance fund, and they definitely are out there. But I'm finding more and more funds are getting specific with the space they want to play in. So I'm a clean energy fund, or I'm a biodiversity fund, and you may undermine yourself if you put too many things in the basket. You might want to think about, because I get your point of aggregation. I think it's a beautiful thing in the Caribbean's coming together as a group of islands to try to make it big enough, and you leverage off of each other's expertise of what you could bring to the table in any one island. But I'd just be careful about throwing too many things into the mix, and then you're cutting yourself out of dedicated funds that might say, I'm specifically wanting to go here, here, or here. Even in the biodiversity space or the restoration or natural capital space, there are more and more funds that are saying, I just want to play there. They didn't exist 5 years ago, but I think that might be, then you're playing to your really core audience, and that's likelier to attract, I think, dedicated capital.
Yeah, just to expand on the last point, this is how our office is structured. We think about ocean as one vertical. We think about energy as one vertical and food as one vertical. We can operate within our 3 verticals very effectively. We have clear processes and procedures to get grants approved, investments approved. I can turn something around in 3 to 4 weeks if I really want to. Most large family offices, you cannot. So we're really lucky. Now, where we can't get things done quickly, it would take a year to get something like this approved. It would be a year. We'd have to get the principals very focused on this. And now it's getting into, you're kind of playing a soft lobby game. Why is this better than this other blended vehicle? Even though there's a lot of very worthy projects across all 3 of our interest areas, it checks every box. But whose budget does it come from? Whose board member has to sponsor this? All right. And not all offices are like that. Some are much more the opposite, where it's a little bit of a, let's just do whatever. And it's less structured as long as it's doing good. And there's trade-offs of both. So it can really discriminate out half of your investor pool very quickly, whether it's in a family office, whether it's a sovereign entity. It's kind of the same story everywhere. Yeah.
Really great feedback from our investors. And I just want to invite you at this stage, if you have any final comments. The portfolio that we would have presented is pretty diverse, focusing on financing instruments, projects seeking philanthropy, as well as some commercial projects, such as the solar assembly plant. We are working with all of these projects to be able to mobilize capital towards the achievement of our overall climate ambitions for the region. Your final perspectives or your final comments as potential investors on what really needs to happen for these projects specifically and for the Caribbean region to move forward to access climate funding.
I know I'm not an investor, but I actually want Thibault to tailor his comments towards what when you access the GCF funding and even the IFC funding, what they said about the way that you did gender and the way that you incorporated capacity building, because I think that's an element that we didn't quite talk about that's really important in terms of accessing financing, whether it's from philanthropy or from other sources. And it was really instrumental in what you're doing. So I want you to tailor your final comments on that, please.
Yeah, so.
All
right. So I think that I very much agree with your capacity building question, because if you are going to invest money in a project, what do you want to do? You want to de-risk as much as possible. And one of the things I certainly observe again in developing economies, and you hit the nail on the head, is we might have the capital, you might have the project, but actually the execution is the biggest risk, not even the technology, or is there a market or whatever, or even if there's an off-taker. It's actually, do we have the people to execute the project? So I think you're absolutely right, is making sure you can demonstrate that to your investment community. The other thing, again, as I was thinking about the beauty and differentiation of the approach that you're taking, is this collaboration across islands. I'm wondering as well if there's an interesting story to tell. I remember, Raquel, one time when we were talking about this in the early vision of Climate 1.5, you said, this island is best suited to, I don't know, waste infrastructure. This island is best suited because of its topography for, capturing energy storage, et cetera, et cetera. I wonder if, as well as you're thinking about the pitch, which island brings what to the table and how you are collaborating across that when you're selling the cross island story. And I think that would also be very powerful and different because you typically don't see that in other parts of the world, that kind of collaboration. I think that will be really attractive to impact investors. And I am afraid I must run, but thank you very much for having me, and we'll look forward to collaborating. Okay.
I really like that closing note on comparative advantage. But I do think separating these into vertical areas would be really helpful to get potential funders, particularly the way I look at the world, much more likely to get involved. This would hopefully allow that kind of anchor, because I think you said you're targeting 3 million as an anchor. Once you get that, you'll start attracting others because you can get a project or two in the field. If that anchor knows where this would go in project number 1 and 2, they're now underwriting a project more than they're underwriting the fund, which can make it a lot faster for them, and allow them to start to demonstrate what they can do in the field and how viable this actually is. Yeah. I'll hand that over to you.
So
I'm really curious how you got a GCF approval also.
Yeah, I got a specific question in relation to a field that I'm not an expert in, but I recognized early that it was necessary in order to attract the most competitive financing, which is actually tapping into the concessional financing that we always speak about. Let's put it this way. Let's say a commercial bank, different commercial bank, different fund, they have this expectation. The multilateral bank, they have this expectation. The GCF has this expectation, right? So not only they want your project to be perfect, but it needs to be above perfection, right? And it needs to have a look at all the potential impact, negative and positive we would have, to communicate around that, to include the community in your discussions, to have all kind of like studies and plans ahead, which is extremely structuring. So what we've been doing is working with the IFC, the International Finance Corporation, so they could train our team around the ESG standard. We were quite robust on everything else, but the ESG standard, we started being trained on it, and I decided to recruit someone specifically for that. That was an ESG expert from the development world. And she actually led extremely well all the studies and the community engagement that was required for the project to be able to tick this box. But not only to tick this box, because it also has a real impact in terms of making sure the community is fully engaged with the project. So I give you examples because I don't like to speak general things. So the project is a huge solar field with a hydrogen storage in the middle, and it's next to a community because Barbados is very dense, right? It's one of the most dense population in the world. And basically in this community, you have people living there that will see a construction happening next to them. How does it benefit to them? So we were able to measure that. We were able to communicate with them, with the neighbors right next door, and also to include in our plan some community benefits projects that are side projects financed by the project itself. So accessing the same financing. So we have like road infrastructure upgrade that we need to comply to. We have a sheep farm within the project, which will have a positive impact because it will make the slaughtering facility in the community have some more work. Also, the little shops there. We were looking at like doing rainwater harvesting training and implementation at the little market next door to the project in order for the project to give back to the community as well. And the most important is to create jobs locally. So within our criteria for our EPC contract, we have asked them to put certain criteria for like some of the labors, especially on the site preparation, that is less specific, and security, to have people from the community as a priority in order to be And we already did it because we installed a met station that measures data for 1 year. It's about to be decommissioned now. And it was installed by the guys from the community. And we were flexible enough to accommodate like simpler contract for them to work on it and so on. So I mean, we have always been integrating it, but without documenting it. Now we are documenting everything that we're doing with the help of Misha Clark from my team that you know. And this is one of the things where we were very well prepared when we had the due diligence site visit, when like 30 people from Washington, Mexico, Panama, I mean, there's people from many offices from both IDB Invest and IFC, which are co-arranger on the debt, came to Barbados and they bombarded us with questions for 3 days. And basically they came out and say, you guys were extremely well prepared, especially on the ESG side. And it's the first time we do it as a team, the ESG side. So they said that we never seen a client that prepared. And it's also because they helped us getting prepared. But that's just the point that I want to make, is that it required a lot of work and it's still not finished. I mean, there's the amount of documents we need to produce in order to access those financing is a lot. And it only makes sense when you have a huge project and you have your development fees are big enough to support those expenses and those recruitment, and actually you can keep the people that you work with other projects. So you need to be big enough to be able to absorb those climate finance things. They don't come like this. And that's why I support really the fact that you refine a little bit with the comments, the fund that you're looking at with grant funding and technical assistance on the business model side. For us, for example, on the competencies, we don't need technical assistance at all because we have the competencies. We need technical assistance in terms of money at risk at the beginning in order to comply with sometimes the crazy requirement locally at very early stage. You know, so those are different requirements here.
So thank you very much for your perspectives and the feedback. As I mentioned at the start of the session, our objective as an organization is to ensure that we serve the needs of our project developers and to serve the needs of the region in terms of building a pipeline of investors who are able to provide funding that matches the needs of those who are seeking to develop climate action projects. Our experience certainly has been that very early stage funding, project preparation support, technical assistance, capacity building, as you would have mentioned, really is going to be critical for us to be able to develop the region and to achieve our ambitions. So I think the feedback that we would have received is really well aligned with the experience that we've had. And certainly we take the point about impact from our international investors and your family office in terms of being able to access philanthropy for our projects. So at this stage, I will invite our CEO, Ms. Raquel Moses, to provide closing remarks for us.
Hi, and thank you all so much. I'm so delighted that you were able to join us today. So I just have 3 things I'd like to say. The first one is, when you look at the global landscape of philanthropy, there was a study done between 2015 and 2021 showing that the region had attracted $7 billion in philanthropy. Of that, $5 billion went to Puerto Rico and USVI. And we were already registered as being underfunded from a philanthropic standpoint. So not only do we need to attract more philanthropy, we also need to innovate and attract different kinds of investment that will help us to close the gaps with both our adaptation and our mitigation. The second thing is that what we needed was that feedback. That was excellent, just helping us to pinpoint really clearly. This is, you know, if you aggregate all of the sectors, it makes it difficult. And even when family offices don't do it that way, if we disaggregate it, we can access the ones who don't care. But the ones who do care, we actually need to disaggregate it so that we can have access and have things processed very quickly. I thought that the feedback that we got from Marissa, from Thibaut, from James, it was so specific and actionable. that I'm so, so grateful for the investors that we were able to attract. And that brings me to my last point, which is thank you. Thank you, Thibaut. Thank you, Shauna. Thank you to OECS and that team. Thank you, audience. Thank you, James. Thank you, builders. Thank you, Standard Chartered and Marissa, who's always been a phenomenal champion for us. Thank you, Keisha and Cheryl. I cannot tell you how proud I am. And I want you to know, they came to CCSA already, baked already stars, but they just turn it up a notch, not just on behalf of the organization, but on behalf of the region and the blood, sweat, and tears that they give behind the scenes. And Tiffany and Janelle, who have been working tirelessly to put this together. I am just so grateful. Thank you to all of you. And what we need are more connections, more introductions. Wherever you see someone that we can connect with, please let us know. That's what we're all about. That's the magic that makes everything happen for us. So I thank you for being here, and please continue to be advocates for the work in the region.